Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at Cannabis Assist. It's a Massachusetts premier cannabis wholesaler. Online with us to do that is Katrina Glogowski, angel investor and attorney. Thanks for being back with us.
Morning, Josh.
Hello, we are here at the World Trade Center in Seattle, looking at pitch deck reviews to see if each one fits our criteria to be a successful investment deck. There's 7 criteria. Number 1, identify business plan goals. 2 is if they know their audience. 3, whether or not they understand the market. 4 is to identify needs and roadblocks. 5 is knowing what sets the business apart. 6 is to introduce the team and products. And 7 is whether or not to create a summary. So Cannabis Assist, a wholesale premier cannabis wholesaler. So the company plans to be one of the largest and highest quality cultivators and distributors of wholesale cannabis, meaning flowers and oils, edibles, topical products, to the Massachusetts adult use market. So they are vertically integrated, unlike Washington, where a retailer has to be separate from a producer processor. They are vertically integrated. Maybe MedMen is a competitor. We'll find out. MedMen had just said that the model doesn't make sense for them, so they're getting rid of production and outsourcing that, as well as taking a look at retail outlets to make sure that they're making a profit, meaning they may start closing some stores that don't meet their minimum sales. So positioning them for success, looking at some possible differentiation here. They have a team, they have production. They expect to be one of the largest wholesalers. They have a facility for 28,000 pounds a year. The company is building out a state-of-the-art cultivation facility with 70,000 square feet canopy, with the option to expand another 30%. They can receive all the necessary approvals required from that town, but they're going to need to receive approval from the Massachusetts Cannabis Control Commission for a change of ownership. So that's always fun.
They don't have a license, Josh. My favorite.
So I'm not sure if they have a license or not, but what they're saying is they may need approval to expand to the full 100,000 canopy. I'm going to assume that they have a license, but we will see.
I read this that they have the approval from the town, but they need approval from the state for a change of ownership. Mm-hmm. So that tells me they bought out somebody else's license and they're going through the process of getting that existing license into their name, which of course means they don't have a license.
Either way, it should be more clear. Mm-hmm. So to date, the Cannabis Assist has registered with the Secretary of State. They have formed an operating agreement and has engaged with architects to begin drawing their facility. They have provisional licenses and an extremely favorable host agreement in place, and they expect to begin 9 months after breaking ground. And
does this sound like an LOI, Josh?
Don't get me started. So they jump right into the founder, John Napoli, and the president, and differentiation. They've leveraged their experience to negotiate a host agreement. They expect to lead a substantial savings. Upfront cost $150,000 a year is a significant reduction fee when compared to the traditional host agreement of 3% for top line revenue. Based upon internal projections, the savings could amount to as much as $12 million over the first 5 years of operations. And the location is ideal for distribution within Massachusetts as it's strategically located around the state's major population hubs.
Josh, I don't know what a host agreement is to know if their host agreement is differentiated.
I have no idea what a host agreement is. I've never heard of it, so I'm not sure. I'm going to assume it's an LOI.
Maybe it's some fangled licensing agreement. I don't know.
So the facility, they got a team with experience, so they are a triple tiered structure. Each room is going to be hydroponic, and they have facilities to contain 3 extraction rooms, 2 kitchens, and 24/7 security.
On the facility they haven't built yet.
So experience is key. They believe that they can produce almost 2,300 pounds per month, 75% of which will be wholesale cured flower to licensed retailers, and 25% will go through the extraction process. So their market overview and opportunity is there's a significant lack of product in Massachusetts, just like every single rollout. So there's no different there. They estimate that in order to fulfill the projected demand, there must be approximately 4.6 million square feet of canopy. The state currently has 500,000 square feet, with a million more approved and in queue. So they have sluggish regulations, making it Massachusetts prime for persistence price arbitrage. Just like every other state that rolls out initially, that's nothing new. Lack of supply, that's nothing new. So they believe that they'll be the ideal candidate once they get their license. So they have a forecasted market, what they believe that the adult use and medical use compounded annual growth rate at 34%. Current wholesale price of a pound of flower is $4,000. I'm going to say that they don't know the market. If you put that out there, you're triggering me. It's a Friday afternoon. I got no patience for this. $4,000 has absolutely no room in any pitch deck for anybody who knows anything about cannabis.
Actually, Josh, in my other job, we are seeing $4,000 pounds coming in out of Massachusetts because there's such a shortage.
Mm-hmm.
You don't build your business on $4,000 a pound. And so I like their little asterisks. They come in at $750 cost of goods sold, which still is high because you don't see $750 wholesale pounds in established markets. So $4,000 is ridiculous, but $750 is still a little high. So why is it that high?
How are you going to compete with Oregon? $500 wholesale, or actually, excuse me, $500 retail, because ounces are going for $30 to $40. Now they're not pretty. Okay, these are outdoor, not pretty ounces. But how are you going to compete if your break-even point is 50% higher than that?
Yeah.
So, like you said, I agree with you 100%. Yes, you're going to see this initially with as much money, $300 an ounce or whatever, at the initial rollout, because everyone has short supply. To put this in your deck is a disservice, because it's incredibly misleading to an investor who is going to look at this number and be like, oh, wow, that's great. This is not going to last long.
And neither will 750.
No. So they have a unique access to the market. In terms of Hempist. So John founded Hempist. It's original hemp retailer in '95. So he's got a lot of experience with hemp. So he's got a good network. Via his relationship with Good Health, John also formed distribution pipeline. So looking at operating dispensaries, they've got a couple of numbers. I don't know if those are LOIs or just a wish list of where they want to go into. And I'm not really sure why that's a unique access to the market.
I think they're just trying to play up his knowledge and experience, which is a good thing because you want knowledgeable people with experience to run your company if you're going to invest. But I don't see this as a differentiator.
Mm-hmm. So they've got some products. That's good. They've got flour and concentrate and infused products like gummies.
Like everybody else.
Mm-hmm. So cultivation, they are looking at maybe being fully integrated with producer, processor, retailer. So they're going to use environmental controls to keep the temperature, CO2, and humidity all at desirable levels.
Okay.
Talk about their extraction. They're going to have walk-in freezers and equipment necessary to produce the live rosin, keef, and other top-end products. It looks like they do kind of know what are the top sellers and which SKUs are moving.
That's good.
So here's a projected timeline. They're going to have pre-construction fourth quarter 2019 for licensing and funding. Then moving into first quarter 2020, they want to be on budget, on time, completion of project for menu design and offtake agreement reached with customers. I think that's a fancy word for LOIs. And then phase 3 is 2020, third quarter. have a successful grow, extraction, and product creation and shipment to retail accounts.
We are currently in February 28th of 2020. You're staring down Q1. You haven't built yet. You don't have a license yet. And you're going to have a harvest in Q3.
Yeah, so they're expecting absolutely no issues with regulators whatsoever, and that's like building a house and expecting not to come across some issues. And you have to add issues every time because it's just part of the game.
Well, we all want to be hopeful, and maybe they just need to update their pitch deck and clarify that they have the license. They've already broke ground, and the structure itself is built, and now they're just doing the inside in order to stay on track to meet that milestone of a harvest in Q3.
Mm-hmm. And then it just abruptly ends.
No ask.
No.
Interesting.
Yeah. That's like an M. Night Shyamalan movie. It's just like, what the hell kind of ending was that?
Well, the ending was they're going to have a successful harvest in Q3. No roadblocks, no competition.
All right. So did they identify the business plan goals?
Yeah, they want a license.
So I guess their goal is to be one of the largest and highest quality cultivators and distributors.
Sure.
Okay. Did they know their audience?
Yes and no. They knew their audience. Look at their product. They definitely did some research into what actually sells, as you mentioned, the top SKUs. They also did a little bit of one of the CEO's backgrounds to establish his connection, but they really did not address the investor aspect of this, or they didn't really understand the market. And let's get back to that slide of $4,000 pounds, where their break even point is $750 a pound. That tells me they don't really understand the market at all.
So can we give them a full point for knowing their audience and half a point for understanding the market? What's your take?
I'm going to defer to your judgment on that, because if you think a $750 pound is going to fly in Q3 of 2020, give them a point.
I mean, I would give them a half because I think that they're right for the first initial month of rollout. You can get whatever you want, but like long term, that's never going to work. So I think they did know their audience, but understanding the market, they are not going to get a full point from me.
Okay.
So we'll give them 2.5 out of 3 so far, I guess. Did they identify needs and roadblocks? I saw some needs. I don't think I saw any roadblocks.
They glossed over the roadblocks. They glossed over, hey, we basically have the license. We don't have it, but we basically do. We're going to build this, and there's going to be no construction difficulties, nothing at all, no problems. And then we're going to have a full-on harvest of 27,000 pounds on our first go around without any issues whatsoever, because our people wear hazmat suits on site. No. And they completely failed to address the competition.
Okay, so give them a half a point for that one. How about knowing what sets the business apart?
Only substantive thing I saw that sets their business apart in any way, shape, or form is growing hydroponically. We've seen hydroponic grows come and go, and they don't tend to stick around for very long because they're so expensive. They're like, oh, hey, long term, we don't need the soil, and we can just flood the river with the nutrients. But I have not seen a successful hydroponic farm long term in Washington or Colorado. Have you?
I have, but I don't think that's what sets them apart, and I'm not even sure that they know that. So I'm not going to give them a point for number 5, knowing what sets the business apart. But they did introduce the team and product, so I would give them a full point for number 6.
Agreed.
And then creating a summary.
No.
Yeah, I don't think they didn't have an ask. They didn't create a summary or um, try to create any kind of buzz at the end. So no sense of action there.
And no
Um,
financials whatsoever.
mhm,
No financials saying we're going to put $3 million into construction of this building. We own this building. We own this land. We have a mortgage. No financials whatsoever. Um, and their financials that they did provide were laughable. The $4,000 pound, the $750 pound. So uh, that's also concerning.
Right. Yeah, I mean that would be the equivalent of putting like a illicit market price on a product and saying this is what we're going to sell it for, and I mean it doesn't really have any value to an investor to tell them what some 1 month supply is going to be, because it's not going to be the long term sales price. That's ridiculous. So
Also, I would encourage these folks to pay a little bit of attention to their actual pitch deck, something along the lines of post agreement. If you're going to buy somebody's failing license, which is my assumption here,
mhm,
and I might be wrong, but don't creatively word around it. Just say we're buying somebody else's license.
mhm,
It makes a lot more sense without me having to struggle to understand what a fangled host agreement is and
mhm,
what does it mean.
mhm,
And it sets them up for my assumptions. What if they have a license? I mean, I went through this whole thing thinking that it was a joke because they don't have a license. And if they said, hey, Sally is selling us her license and we're good to go and all we need is our final approval, why call that a host agreement and things like this? So general advice to people writing pitch decks: don't get creative. Keep it simple, stupid. The KISS principle, because investors don't want to work to understand what you're
mhm,
trying to communicate.
mhm. Yeah, this seems like a deck that we're seeing a lot more of, and that would have worked between 2015 and 2017. Would have been a lot more difficult 2018 moving forward to present, where you kind of have an idea, you have some letters of intent or memorandums of understanding, and this would have been a perfectly fine business plan. But the sign of the times now is if you're not generating revenue, people are not going to invest in you, especially if you're focusing on being an agricultural wholesaler. If you're going to be growing this commodity and you think you're going to be getting $4,000, that's an insane business plan to build your foundation on. If you were fully integrated, well, then you have the commercial real estate to kind of make that play off of, where you're producing and selling. But if you're just growing and wholesaling, I think you're going to have a huge uphill battle if you haven't already planted a seed yet. These companies are not ready to launch. If you haven't already generated revenue, you've missed the boat.
Basically, maybe they should retool their pitch deck to be a real estate investment trust to help them fund construction.
Yeah, or just go after all of the available licenses and be fully integrated, and start moving. I mean,
Yeah.
I don't know. I just think the time is not right for this deck, at least not in North America. Go to Europe, you're fine. France is like circa 2015 right now. This would work great over there. I just don't think that there's any room for tolerance right now with investors in North America. Not yet, especially with some of these companies declining, being able to pick them up for pennies on the dollar that already have the property, plant, and equipment, and strains and experience, and they don't have to worry about the issues with hydroponics and the water fluctuations in temperature and all of that. So I don't know. If I'm wrong, let me know in the show notes. But with that, I think we're going to roll this one up. I want to thank my guest, Katrina Glogowski. She's an angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.